What's up, everybody? My name's Tony. I'm a full-time trader, and I make this video every single Monday to help you be more prepared for the week ahead in trading, because there are key levels that you need to know about, because if they break, it leads to very easy trading, and if they hold, you now understand the momentum of what should play out throughout the week. Knowing this information makes trading so much easier, and so I don't want you to struggle like I did when I was first starting out. So I make this video every single week. So feel free to subscribe so you don't miss the next video to walk you through the levels where you need to be looking for on the markets here and on some tickers. So if you have tickers, please throw them in the comments. I will add them to the list for next week. Also, feel free to check out the links down below for free online trading courses, completely free, hours worth to teach you everything that you need to know about day trading, swing trading, reading these markets, investing, etc. Let's start with SPY. So SPY is an S&P 500 ETF. It's the stock that I mainly trade. It's just the markets, giving you a general idea of what's going on. So last week, we ended up closing up above its 50 EMA, which was a big deal. I mean, that's fantastic. We have a really nice hammer candle coming in on the weekly chart here. We are gapping back below the 50. I would have liked to see a lot more excitement coming through here on the bulls on a gap. It's not quite there yet, so we could have a day or two of chopping through here, but overall, I am leaning more bullish this week. We should have a recovery rally pushing back into 575 all the way up to 590. Now, I think that this is a little bit more of like a dead cat bounce, meaning it's going to be short-lived and we have a really good chance of rotating over. Time will tell what the bulls do up into this level of what's actually going to happen. This is where it's going to be very, very crucial to watch for this week and the next week leading into this 590 level. So if we zoom here onto a daily chart and look at the option levels, because the option levels are going to be such a cheat code for you when you're trading. It's going to show you where the big support and resistance is, and maybe some hidden levels where bulls or bears might be at are going to be located. And so we have huge puts sitting at 550 for this Friday here on SPY. We've also got quite a bit of puts sitting at 555 and 560, but 550 is the large level. If we have broken through each one of these barriers and we start taking out the low of last week, we could be seeing some seriously strong selling. It could take us all the way down to 530, even 510 by the end of this week. So just be prepared, get yourself ready. Bulls should be holding these levels, but if they don't, it could be a monster fallout this week. Be careful of traps, right? We should see some strong drops through here if this does break. If it breaks down and then immediately runs extremely hard back up above 550, that would be a trap. That should be the catalyst for some strong bulls coming back through. Now, to the bull side here, let's look at the bull scenario, because that's what I believe is most likely. That's the probability of where we're going to be playing out. This 200 EMA on a daily chart sitting around 570 is going to be a very hard level to get through for the bulls. So expect the bulls to hit their heads up against this ceiling and possibly get a little bit of dips and then reload back through here to see if this can't start getting bought back up again. So 570 is what I'll be looking for, and really 575. Like, that is the key spot for these bulls. I believe the bears are going to start to defend very heavily, 575 all the way up to 590. So if the bulls can push into this box, I would expect a lot of bears to have open orders through here and a lot of bulls to be exiting through here. Retail traders are going to start buying a lot through here, and that's why I believe this could have a pretty sharp drop, because the amount of people that are in bullish after this big of a bounce, they're all going to get stopped out and it's going to rotate back down and it's going to start this little bit of a bear market. It could be a little bit of a rinse and repeat of 2022. I just think it's going to be even more extreme than that. So just be cautious in this market, because key levels have been broken, and that's your first warning sign. If you understand price action, you will be able to see potentially what's about to happen before it happens. How am I able to start looking and going, well, this thing probably is going to rotate over? Why? Because the bulls didn't do their job over here. This level should have never been broken. That is my first warning sign that the bulls are not here. Even though we are going to get a bull bounce, my friends, you've got to understand this. The bears can be strongly in control and still have a strong bull bounce while they're in control. This messes up people all the time. They're like, yes, but it's been bullish for 4 days. I'm like, yes, but the bears are in control based on the structure that was built over here previously that was broke. And so you're going to start getting these lower highs built, and everyone's going to try to go bullish on this short leg. And instead of being with the large momentum and looking bearish here, they're going bullish here and then getting stopped out. So understand where the momentum is. And then when that momentum flips bullish, people are trying to short this down here when it's the dip that needs to be bought. So you've got to understand price action so that you can be on the right side of momentum. And right now, my friends, the momentum is to the bear side. We are going to have a bullish bounce either this week or next week, I'd imagine. It's not too far off. We will have a bullish bounce coming in here soon. The question is, will this bounce get bought up by the bulls and push through the key levels of the bears up through 590? If that happens, expect some dips to continue to get bought up and for us to go to all-time highs. Or if we start getting this and the bears start to push back through at 590, we're dropping down. So you've got to be prepared for these scenarios. You've got to understand that this is where the bears should be strong, not the bulls. So make money up to around 575 to 590 and then get very cautious, sit back, let the market show you their hand. Don't try to guess. Don't be like, okay, now we're going bullish because it's going to fall apart. Or now we're going to go bearish and then it bounces. Just let the market show you. If you're getting some good reversal signals up around 580 or 590 this week or next week, then yeah, it's time to go short because those reversal signals on a shorter time frame are letting you know, hey, momentum's probably playing out here for the bears. Whereas if the bears are not stepping in hard and it pulls down and you see some bull momentum coming in through here on a smaller time frame, that buy the dip might be coming back through. So don't predict. You've got to sit back and be patient enough to react. Let the market show you their hand, and then trading can be so much easier. So this is how I'm looking to play SPY this week. Again, momentum should be bullish. I hope these levels that I just pointed out will help make trading easier for you this week because you'll have a much better idea of who is strong, who is weak, and what needs to hold, right? Bulls should be strong this week, but if they start giving up 550, look out below. It is going to absolutely crater this market, I believe. So very, very important level to watch. Be very careful with that. The next ticker that we're going to take a look at today is Tesla. Now, Tesla has already broken through its first strong buying spot, which for me is, again, it's strike one. It doesn't mean that Tesla can't bounce out of this dip, but it definitely is a strike against it, meaning I need to be a little bit more careful when it comes to buying this dip because there's a good chance that the bears are in control. We're going to get a little bit of that bounce back up and they're going to be rotating back lower. For right now, time will tell. We did come back in and fill this gap completely from earnings, and we have been seeing a lot more bull action, a lot more lower wicks coming through. So some of the big levels that I'm going to be paying attention to this week on Tesla is going to be that 270 mark. 270 is going to be an extremely tough level and a resistance for the bulls to get through. I could see us working our way up to 270, maybe 280 this week, and then finding some bears pushing us back lower. So this type of price action would not shock me over the next 5 to 10 trading days. It's also very possible too that we get up to 260 and then this thing just rotates back down and we start to visit 220 again. So let's add our option levels onto this chart here. So 230 and 220 are strong put levels, meaning it should act as support. I believe that 220 would be the low of this week. I don't see us taking that out this week. It's possible, but I don't see it. 230 is going to be the next real spot where I think bulls could step in pretty strong. Now, we have strong call wall sitting at 260. Again, that's going to be a very strong resistance, and then a monster weekly resistance sitting at 270. So I like this area for the bears to push us lower. If it can break through 260 and 270 very strongly this week, then I believe 300 would be the absolute best case scenario for this week. That's a massive move. Tesla's able to do it, but we have massive amount of calls sitting at 300. So I don't believe we're going to get much higher than 300 by Friday if it makes it there at all. But just know this is where the bears should be at. So if the bears fail to push Tesla down and it starts to break higher than 270 strongly, then there's a shot that 300 could be in the cards for this week. So pay attention to that. And again, that could be some pretty easy money if the bears don't step in where they should. All right, the last ticker we're going to take a look at today is Bitcoin. So Bitcoin on a weekly chart has broken some massive bull key levels. We have a very strong double top here on a weekly chart. That tells me that bears are in control and the rips will most likely be getting shorted back a little bit lower. So I would expect this type of price action to come in over the next few weeks to a few months. Things can change, right? It can just drop out of here. It doesn't even have to bounce. Or if it does bounce and the bears don't do their job, then there's a chance that this could try to start making into a new all-time high. Any one of those scenarios are possible. It's not about being right. It's about understanding what levels to actually look at. And for me, it's about 90,000. This 90,000 level right here is going to be very, very telling to see if we're about to do this or if we're about to do that. So keep an eye on that level. Once you understand what levels to look at, now it's just sitting back and going, okay, what is it doing at those levels? Are the bears stepping in like they should? Or are they being weak? Are the bulls taking back over at this level? That's shocking, right? That could lead to a large bull move. So it's about looking at these levels and figuring out what the markets are doing there based on sentiment, price action, and strength. Sit back, react, don't try to predict. So strong move back down. Yes, we are at a really good support. It could go a smidge lower, but in my opinion, the bears are taking over in strength. So I would imagine that we are going to be getting some bulls back up into 90,000 probably this week or next, just like the markets. And then from there, what do? Most likely the probability is that we fall back down and we come visit 68 to 65,000 or so on Bitcoin over the next few months. And then we see if the bulls come back in and try to buy up their bull area. So zoom in here on a daily chart. At the moment, it's looking a little bit more, it looks a lot more bearish here on a daily chart than anything, but it made it up into that bear level and it did get rejected. Now we're starting to push into this key bull level. So I believe we are going to get another visit back here, probably into 65 to 70,000. And then we'll see if this can't break out and get going more bullish. But I don't think there's too much of a downside on this one, at least for right now. I would be leaning a little bit more bullish than bearish over the next week or two, unless proven otherwise. But once we start getting that 90,000 level, I would expect us to start really getting beat up. I don't see it going much lower than 60,000, 55,000, somewhere in that ballpark range should be a place where bulls should step in and start to push it higher. It is possible that we are working on a head and shoulder pattern. So left shoulder, head, drop really hard. If we make it down to like 50,000, then this could be cards here where it comes down to 50, bounces back up to like 70, and then this thing falls back apart again. So really, we need that higher low to come back in and a higher high to place out if we're going to continue this party. If the bulls do not buy the areas that they should and it comes and revisits the previous higher low, that's extremely strong for the bears. That would mean that a bounce is most likely going to get shorted and rotated back down. My friends, I hope this video helps you in your trading this week. Identify those key levels. Just put alerts on your chart there, make notes on your chart and just say, watch this level. Look for the bulls to come in, look for the bears to come in, what should happen, and then see if it does. That's going to make your trading so much easier. You'll notice that if you just sit back and let the markets come to you, you'll have better results in trading. The more desperate you are, the more money tends to leave your trading account. You've got to be able to be okay just sitting back, waiting it out, and seeing what happens. If you would like to learn how to trade, check out the links down below. We have courses from very, very beginner all the way through advanced trading to teach you options, strategies, and everything in between. It's all for free. So check out those links. If you would like to come trade with us live every single day where we navigate these markets and teach you how to do it as well. If you would like to come trade live with us and learn from a professional trader every single day, watch us navigate these markets, have us show you what a great trade setup is, how to work through a strategy when it's going through hard times, how to milk even more money out of these markets every single day. Check out the links down below for the lifetime and all access pass memberships. You can start your 7-day free trial and come be a part of our community, trade live with us, and learn how to actually trade. We here at Real Life Trading are not about just giving you trades. We're here to teach you how to trade, right? I don't want to just give you a fish. I want to teach you how to fish so that you can do it yourself. It sounds complicated. It sounds intense. We have an entire process to walk you through exactly how to do it. And we have helped thousands of people learn how to trade. We will help you as well. So check out those links down below, and I will see you next week.